Hello traders, welcome back. This is my analysis for the Euro versus United States dollar, in which I'll briefly talk about the fundamental drivers and then discuss my point of view regarding the graphical analysis and the opportunities for the week ahead. If this is your first time here and you'd like more videos like this in the future, make sure to hit the subscribe button. Let's first check the calendar. We have Wednesday for the Euro, news regarding GDP, and for the US dollar, the inflation rate and retail sales. And Thursday we have for the Euro, unemployment rate, and Friday for the US dollar, Michigan consumer sentiment. So be aware that these are important market movers. Now let's check the articles. So basically what they're saying is that while the Dow Jones index was losing some points, the investors needed a safe haven, and as the US dollar is seen as one, its demand increased, causing the depreciation of the euro. However, this is to be seen as a short-lived event, as the US dollar is seen in a bearish trend for the time ahead. You will find the links to these articles in the description below. Now let's check the charts. I will first look at the weekly chart to get the direction, and then on the daily chart for the actual trading opportunities. On the weekly chart, the bias is bearish because price got under this 1.2288 level, and if you recall my last analysis, I said that the bullish bias is viable as long as price stays above this level, and as the week closed under this level, the bias turned to a bearish one. Now let's check the daily chart. Here the bias is also bearish. The first argument is the fact that price closed under this 1.2296, which is actually the psychological correspondent of 1.23. And this triggered the selling opportunity that I was talking about in my previous analysis. So I hope that at least some of you partially closed the order and made around 50 pips. Of course, this move should continue. I'm expecting it to continue. Another bearish argument is the fact that price made this height over here, and you can easily see that the last high is lower than the previous one. So this is actually a lower high, and that's a problem in a bullish market. And this also turns this structure here into a double top. So if I measure the height of this double top, I can see that it's about 200 pips. So from this neckline, which corresponds to 123.36, I'm expecting price to descend around 200 pips, so around 1.2144. Let's make that 121.50. Another argument is the fact that this retracement here is about 170 pips. This retracement is about 150 pips, while this retracement is, at least for now, 300 pips. So it's kind of a big retracement, which means that there's a lot of profit taking in this area, and as a consequence, I'm expecting this move over here to continue. Now let's see the exact opportunities. The selling scenarios are like so. I would sell aggressively any retracement to this 1.2296 level with a target first around this 1.2150 level, and then around the psychological level 1.21. Also aggressively, I would sell after a bar or a candle closes under the lows of these candles here. Another option is to sell on a fakey pattern, so after price tries to get above this 1.23 level but confirms this 1.2335 as resistance and then goes under this 1.23, thus making this a fakey pattern and giving another chance to the bears. Again, the targets are the same, first and second target. And another option is to wait in a conservative manner for a retracement to this 1.2296 level after price makes a new low, for a retracement that will confirm this zone here as a resistance, and then will make price descend. Again, first target here, second target here, and I'm expecting the move to continue downwards. Of course, on the other side, because we have to be prepared for any possibility, a buying opportunity after price gets above this 1.23, confirms it as a support, and then closes above this 1.2335, or if price makes a fake break of this level after it gets above it by means of a hammer or a Takuri pattern. Basically, a Takuri pattern is a pattern in which this long tail is at least 3 times long than the body of the candle. For these buying opportunities, I would set a profit target just under this psychological 1.25 level. Well, that's all. Thanks for watching. If you enjoyed this video, I made another video about the Australian dollar versus United States dollar. Remember to like if you enjoyed the video, subscribe if you want to get more videos like this in the future, and comment to let me know what you think and what you would like to see in future videos. Trade well and take care.